Hey guys, it is July the 27th, and we've got the FOMC meeting today. So really, I mean, almost anything I say is going to be more or less irrelevant in about an hour or so. But you know what? There were a few things that I did want to just mention today. Let me share my screen. Past performance is not indicative of future returns. As you can see, the indices were up hard today. And we kind of saw that last time. So even if you do have hedges on, you just need to hold them through the end of today into tomorrow, because if you'll recall, the last time the FOMC spoke, that's what happened was it rallied. And then the next day, the whole market just like decided to dump on the world again. So be very careful being completely unhedged and just too crazy long in this marketplace, because quite frankly, on my first, I'm just under 100 calls at this point. Most of the calls have come out this week. And these are not great numbers. I mean, it's really 50-50. Even though some companies are beating estimates, they're beating estimates that weren't great, with lack of a better way to say it. So don't believe the hype that earnings is fabulous this quarter. It just simply is not. So that's the one thing I would say. I do want to show you FinBiz, one of my favorite companies out there to take a look at. I do really like this visualization that they do, as you guys well know, because I'm always showing it. But if you look at it, it's really big cap tech, which we kind of knew was going to happen, dragging everything up. And I also would not believe the hype that tech is somehow immune to the entire global economy. It's nonsense, with all due respect. But you know what? The only thing that's actually immune is really raw materials, and raw materials is immune because it's all coming from the supply side of things. You know, this entire recession is being driven by a number of things, of which the massive increase in energy price over a short period of time is one of the biggest drivers. So it actually, the only thing that makes sense when it's up right now is food and energy. And that is really because nearly every bit of consumer budget is slowly but surely being drained out of other parts and put into this area. Now, is it the case that businesses are spending a lot on labor? Yes. Why? Because of food and energy costs to their employees, making it more expensive for them to even go to work, for lack of a better way to describe it. But also they are spending on technology. It's just they're very muted because most of them are concerned that demand is going to start to get weak if we don't have some resolution to some of these global issues that continue fairly dramatically and don't seem to be letting up at all. So that's the macro. Don't get confused by the hype, which every day you get another news flow item. And sometimes it's hard to just lift your head up and see what's actually happening there. Not that I necessarily know everything that's happening, but you get kind of a mixed picture. Durable goods came in really, really strong. And this is really autos, okay? There's if you take out autos, you get a number that's like 0.3, 0.4. And so you know, the one area where there should be strength is actually autos right now, because autos has a backlog like you wouldn't even believe. The real challenge is the future projections. Now, for me, I do have strangles going into Ford's earnings report, mostly because they're just so cheap. I mean, like, you can get a good strangle on that's only $1 around it, which, because the Ford is such a cheap stock, is actually a fairly big move for Ford at $12.60 or 80 cents, whatever it is today. So if you buy them at 13.5, $1 move is actually a huge move for something like Ford. And yet at the same time, you know, like, you're really only out, like, you know, a certain amount. So it might actually be interesting to play if you've got a little bit of extra capital, because even though I don't know who's selling these cars. GM didn't come out with significantly higher volume numbers. Tesla has told you. So who's really left if I'm seeing 25% up volume on the trains? I really just don't totally understand it. So that's why I'm like, well, I got to at least try to play forward a little bit and see what's going on there. Microsoft and Google, I just want to very briefly show you what I saw there. Microsoft's earnings were actually good because they guided downwards as well. But even if they had not guided downwards, their operating margins, I mean, they gave up a lot on currency. It's kind of amazing. And I really recommend you take a look, because they do produce a number that's both with and without the currency. But what I really wanted to show you is the part of the business that's doing really well. Intelligent cloud as well with Google. You can see the cloud business is up a tremendous amount. YouTube ads is up as well. I mean, like it was really a strong revenue quarter. Both companies are investing in the business right now. And so, it's anyone's guess how the market wants to treat them. I think that even with how they're investing, at least they're not taking a big L like some of the other companies are in order to invest significantly more in all of their businesses. But I did want to show you how strong the cloud business is because, the other company that has a cloud business is obviously Amazon, which is why I've been kind of sensitive to being too aggressively short Amazon. I kind of want to see, this is kind of a weird quarter for Amazon, to be fair. You've got inflation that could help certain aspects of their business, revenues, maybe what have you, but they still have to spend their way out of whatever's going on with their retail business. And they have lost some headcount there, as we've seen in the news items. So Amazon is going to be controversial tomorrow after the close. And then we'll go into the end of the week. HES reported earnings today. I did not actually produce a slide on that, but HES's earnings was incredibly strong. I mean, these energy companies are pretty much just minting cash right now, paying down debt and giving it all back to shareholders. And with that, I have stopped sharing my screen. Any questions today? Because it's really on FOMC day.
Great call on Google. They're growing 30 times. Do you think they'll continue to grow at that rate?
Yeah, I do. Because, I mean, like they have the, there's cool things they can do with every single one of those businesses, which is what's crazy. Do you know what I mean? Like, do we think that there are new and exciting things that can happen to YouTube? Yeah, we do. You know what I mean? Like just even the shorts, the part of the growth in YouTube was from this new shorts thing that they have that's competing with TikTok, and the amount of viewing time is increasing, not decreasing with Google, since they make money on ads. It's just fine. I do think the cloud business, as much as it's laughable relative to how much Amazon and Microsoft has accomplished, is great. And then I think they do actually have a games business that's nascent and growing. So we're going to hear more about that in the future. But it's really hard to bet against Google. They're so well capitalized. And whenever they decide to do something in a big way, it's just, I think the only thing that could ever stop Google is the continuous and constant onslaughts of antitrust, and yet somehow they still manage through it like a champ. So it's hard for me to bet against Google, and it's so cheap relative to the other guys out there. It'd be one thing if it wasn't, but its valuation is actually.
Is the growth coming from cloud?
It's coming from everything. It's coming from it's coming from ad spend across the platform, and then cloud is actually doing okay. Cloud grew like cloud was up. So it was 4.6 billion last year, now 6.2 billion. So it's like what, 50% up. Crazy. Like it's not kind of growing. You know what I mean? If it was kind of growing, I'd be like,
Amazon's a big player there.
Yeah. Amazon, actually Microsoft's cloud business as well is growing pretty strong. I mean, it's growing a little bit slower, but there's a little bit more mix in there. It's not pure Azure in the cloud numbers. So it's a little bit hard to be like, oh, one's growing slower or faster than the other. But yeah. I mean,
okay. Thank you, man.
All right. Good luck on the FOMC meeting, guys. See you tomorrow. Bye.